Yes, well, here in the UK, we've got a raft of soft employment data this morning. Let me run you through the key points that you need to know. Payrolls fell by 11,000 on the month in January after a decline of 43,000 in December. That makes it the 11th straight month of job losses from the British economy, which now total 390,000 since last January. The unemployment rate ticked up to 5.2% in the 3 months to December. That is the highest level in almost 5 years. Meanwhile, wage growth, including bonuses, came in far softer than anticipated at 4.2%, with private sector wage growth at its lowest rate in 5 years. All of this ahead of January's inflation figures tomorrow, which are expected to show a 3% uptick in prices, and that would be 40 basis points down on December's print, although still 1.5 times the Bank of England's target. Traders have been weighing up what all of this means for the central bank, now fully pricing in 2 rate cuts this year and a near 75% chance of a move lower at next month's meeting. Steve.
A little bit of context on what that means as well, and of course concerns about UK government finances and the politics over in Westminster as well, both been giving the gilts a bit of a wobble as of late. Actually, in this case, though, we can see that the prospects of a rate cut sooner rather than later. Really interesting, because there are 2 reasons why the Bank of England has been worried about inflation. One is service sector inflation, the other is average weekly earnings. And if AWE in the private sector, they don't worry so much about the public sector. If in the private sector that is abating somewhat, then you can see the effect it's having on the gilt yields. And 4.366 is where we are currently seeing the pivotal 10-year. We look at the home builders. It's the old knee-jerk, isn't it? As soon as there are prospects for rate cuts, we see the major home builders rallying. Barratt, Redrow and Persimmon and Taylor Wimpey are the biggest 3. They are all rallying, albeit with measured gains this morning. Whittaker spoke on Europe Early Edition to the shadow business minister. That means the opposition, by the way, for our international viewers. The Conservative MP Gareth Davies early this morning and asked his view on employment in the UK.
The last election, I think unemployment was around 4.2%. It's now 5.1%. Let's see if it ticks up this morning. If it does, or it stays the same level, I think that's clearly as a result of waning business confidence. We saw in the last quarter of last year that construction output has reduced by 2%, services output didn't grow at all. And I think this is just because of the increase in costs for businesses across the country, added national insurance costs, the added burden of the regulatory costs of the Employment Rights Bill. And so it's no surprise that businesses are reluctant to hire new people, and when people leave, replace them. What I really worry about is what's happening in the 16 to 24-year-old category. This is now at 15.9% youth unemployment. There's now nearly 1 million people who are not in education, employment or training. And unbelievably, about 700,000 graduates are going on to welfare benefits. So it's not a pretty picture for younger people, and the government's got to get a grip on making sure that confidence is restored to business so that they can start hiring again, and that they tackle this absolutely phenomenal amount of wage growth we're seeing for younger people.